Their faces tell it all. Treasury mandarins all smiles after the successful issuance of yet another Eurobond. This time round, 203 billion shillings listed at the London Stock Exchange. So successful was the issuance that Treasury, in a press statement, said investor appetite exceeded 1 trillion shillings. But back at home, the now obvious elephant in Kenya's economic room once again stood out. The International Monetary Fund officials visiting the country this week told the Parliamentary Budget Committee that the country's debt burden was fast becoming unsustainable.
Our role, to a large extent, to warn, about when you're in a situation where you're generating too much new debt because of the deficit, that you eventually will end up in a position where it's going to be very difficult to deal with.
The reality of the latest instrument that now pushes Kenya's debt to 4.8 trillion shillings, the last 4 years having seen an increased appetite to debt. The government has, however, defended this borrowing, noting that it had spurred growth, but the IMF team is not convinced.
Well, the more stable and the more these investors, including domestic Kenyan investors, the more they can be comfortable that things are stable and reliable and predictable going forward, the more they will come here and put money into the country.
In the statement, Treasury noted that the Eurobond would be critical in funding infrastructure development and liability management, which loosely translates to servicing of other debts. In his official Twitter account, President Uhuru Kenyatta lauded the move, terming it a mark of confidence on Kenya's economy. On Wednesday, analysts at Control Risks noted that the country's debt levels remained a thorn in the flesh that needed to be dealt with. There's the latest call in growing concerns.
We are borrowing to pay debt. Now that is not sustainable, and it will be interesting to see how the government deals with fiscal management going forward.
Last week, global rating agency Moody's downgraded Kenya's rating owing to the rising debt levels. Moody's also said it expected Kenya's debt to increase as officials raised spending while struggling to boost revenue and trying to cope with higher interest rate payments. This coming on the backdrop of revelations that the IMF had put brakes on Kenya's standby credit facility 7 months ago due to non-compliance with fiscal targets. The IMF team is expected to meet government officials in due course to reignite talks on the opening up of the facility and its extension. Patrick Igunza, Citizen, live at 9.